Do you see the time is approaching where Australia will be asked to choose between its biggest trading partner, China, and its biggest military ally, the United States?
Yes. Very bluntly, yes.
Welcome. As the S&P 500 crossed into a bear market overnight, titans of Wall Street began criticising Donald Trump's tariffs. Is it significant enough to weigh on the president and prompt him to consider changing course?
Well, it's like asking, do turkeys enjoy Christmas? The answer is no. So there's no surprise whatsoever that titans of Wall Street, which is an institution, is completely opposed to everything that tariffs represent, would oppose Trump tariffs. All we're seeing so far from the Trump team is a doubling or a tripling down. And it would be a real surprise to imagine that they would step back just because a few hedge fund managers criticize them.
Does it mean that he no longer needs captains of finance and industry on his side?
Well, no one knows what he needs longer term, but you have to understand fundamentally what he's trying to do is to change the entire US and therefore global economic and financial system away from financialisation and a focus on finance in the US towards production. Well, guess what? Wall Street doesn't make any loans for production and hasn't done for decades. It makes all its money from finance. So, of course, they're going to be opposed to it. And of course, he is, likely to be at odds with them over that. But if he backs away, that's the centrepiece of his entire agenda. Gone.
The White House claims countries are now clamouring to make deals. But then there's China, which is facing an effective tariff rate of 124% and saying it'll fight economic bullying to the death. Does China's reaction play into Donald Trump's grand strategy?
Well, it's centre to his grand strategy. Our view has been for some time that this is primarily about the US versus China, that the US says so itself. And the issues with every other country globally are largely a sorting effect of who will stand with us versus China and who won't. But the 124% is already staggering. And then, of course, they can add more on top if they accuse them of buying Venezuelan oil or Russian oil. You can be heading up towards nearly 200%. It's a staggering figure we're talking about. And naturally, China is going to push back. But again, the US cannot blink in doing this. Otherwise, that's the centerpiece of the entire strategy gone. So it's basically push me, pull you. It's moving in two directions.
Have the threatened tariffs against China now reached the level where they've simply lost meaning? What's the difference between an effective tariff of 74% and one of 124%? Don't exports just stop?
Well, it's a very good question. I mean, above a certain point, yes, effectively you are saying we will not be selling that good to you. And there are all manner of second and third and fourth order effects that flow from that, because it means things won't be going from A to B pretty much at any price. And obviously we saw during COVID what that can mean for supply chains. But naturally there are problems in China too if it's got nobody to sell to. And lots of other countries around the world, like European countries, for example, are worried about having excess Chinese products suddenly dumped on their markets, wiping out domestic production. So the effects from this could be quite spectacularly bad.
Elon Musk has raised the idea of what he calls a zero tariff situation between the US and Europe. How likely is the US going to be in being able to attempt to carve out new so-called free trade zones?
Well, that remains to be seen. On one hand, you could argue that the strategy appears to be a permanent 10% tariff against everybody as a baseline, as a shift in their taxation structure, which is we cut domestic taxes, but we effectively tax consumption and or foreigners, depending on how you look at it, by having a 10% universal tariff. At that point, Europe couldn't go lower than 10. But if there is any flexibility on that, which remains to be seen, very, very clearly, part of what the US would like to achieve is, alongside other things, to have an extended free trade zone with the understanding that within that free trade zone, logic tells you the US shouldn't run a trade deficit permanently. Because if it's genuinely free trade, I'm not trying to talk from the White House hymn sheet here, but economic theory itself does suggest that if you structure it correctly, which is a big issue in itself, you shouldn't run a permanent trade deficit or surplus. It should basically fluctuate around zero. So they would like to have that with Europe, but they can't do that unless Europe puts the same tariffs on China that the US is. And that's the big part of the puzzle many people are missing.
Do you see the time is approaching where Australia will be asked to choose between its biggest trading partner, China, and its biggest military ally, the United States?
Yes. Very bluntly, yes.
How soon?
Again, within months, potentially. That's a worst case scenario. But if America is going to put forward some kind of new, what they call Mar-a-Lago Accord, saying trade and capital, which is very important, capital, are only going to flow within this new dollar-centric US security-backed system along the following lines. And one of those lines is you tariff China at the same rate we do. And I reiterate, that's the part of the puzzle far too many observers are missing. Then Australia has that choice. Do you have any defence and that tariff on China, which will of course see a blowback from China, or don't you have any defence? And then you can trade with whoever you want, but no one's defending you.
How do you view Australia coming to grips with that question at this point of time?
Sadly, in utter denial to a large extent, because it's an uncomfortable choice. And it's not only Australia, by the way, the same's true for people I speak to right the way around the world. But there's understandably real resistance to recognising that having free defence from the US, which is what most people have had for a long time, and a completely free choice of trade partners is a world which has now ended, and you have to choose one or the other.
Michael, how often do trade wars lead to hot wars?
Well, more often than we'd like, which is sometimes, and it's impossible to rule out that as an ultimate outcome. Certainly the 20th century shows you the risks of these things, which is exactly why it is important to deal with the economic imbalances within the system that have led to exactly what's happening now today. It's not anyone's central forecast, but clearly it remains a fat tail risk, or a grey rhino rather than a black swan, shall we say.
Michael Every, thank you for your time.
Thank you.